everything for us is a long game. It's never like, what's a business that I could just buy, pull some cost out, fix up and sell. Wherever people are taking simplistic top-down views, if you're right in the detail, you'll find opportunity. What we say is this something that's critical to society, and is society going to need more of this over the next few decades? We like investing in private companies, or unlisted companies. The reason for that is, it's going to sound nasty.
Hello and welcome to Shared Lunch, brought to you by Sharesies. My name's Sonia, and at Sharesies we're on a mission to create financial empowerment for everyone, which is why we do these chats. It's a chance to peek behind the curtain and chat about what's going on in the world of business. Today on Shared Lunch we're joined by Paul Newfield, who's the CEO of Morrison, a global infrastructure manager who is known as the manager of ASX and NZX listed Infratil. Before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome, Paul.
Hey, thanks, Sonia.
Thanks for joining us today. So you lead Morrison, which has about, from our records, $25 billion in assets under management, 7 offices across 5 countries from Europe to Singapore, and over 200 professionals working with you. So tell us, how did it all begin for you? I think we know you studied philosophy and now you're managing this company. How did you get here?
Obviously what you're asking is, when you do a philosophy degree, out of all of the many job offers that came to you after you finished your master's in the philosophy of love, why did you choose infrastructure? I did my degree, I then went backpacking, came back thinking I'd come back with ideas about what I'd do with my career, and instead I just came back with a credit card bill, and literally went into the careers office at university and said, can you give me the whole list of any employers who come willing to look at philosophy grads? And it was quite a short list, and happened to have on it Boston Consulting. I didn't know anything about what strategy consulting was, but was lucky enough to kind of find this organisation where they didn't care too much what your degree was, and they would teach you the basics of business. And then literally one day I was having a bad day at work, and I caught up with Rachel, who was an old colleague and friend who now worked at Morrison. And she said, oh, this is great, I've been telling Lloyd Morrison about you should meet Lloyd. Then next thing I know, I get this text message from Lloyd Morrison, who at the time was a real big figure in New Zealand, not just in business, but campaigning to change the flag, always very prominent on issues that were important for the long-term good of the country and the world. And he said, I'm going to be in Auckland, I'd love to have a coffee. We did that. We talked about all kinds of things, none of which were my CV. In fact, he hadn't seen my CV. And at the end of that conversation, he said, you should come and work for me if you want to. If you don't, you're an idiot. And then I got another text from him saying, I wasn't kidding, come and meet the team. What really excited me was, here is this guy who had started what was basically the world's first infrastructure investment firm when the asset class didn't exist, and had been able to do that because New Zealand was so early, introducing private capital into things like renewable energy and airports. And then had gone on to take that to the world and had this complete attitude of, well, if anyone can do it, why wouldn't it be us? And having spent my career in professional services where you're surrounded by really smart, overachieving, insecure people who are always fearing failure, I was like, here's a guy who's really smart, overachieving, but doesn't have any fear of failure. And so I basically resigned and took up the job offer.
What a story. I think definitely known for the impact for infrastructure and to art as well, right?
Yeah, and actually that was one of the cool things. Lloyd was, great support of the arts and all kinds of music, so from opera, some quite obscure orchestral things, through to great Wellington bands who I liked. And so to think here's this guy who's got such broad interests and genuinely seemed to, in all things, start with, what does the world need more of, and how do I make that happen? And when you think about it, even today, we never spend any time fussing on an investment idea to say, is this infrastructure or not? What we say is this something that's critical to society, and is society going to need more of this over the next few decades? And that leads you to places like investing in renewable energy, secure storage of data, which is actually a really great way to think about investing, because it's good for the world, but also you tend to find you make better returns because you're investing in things the world's going to need more of. You're always putting your marginal dollar at work into something that has got its own investment options inside it.
Yeah. So tell us about how Morrison is structured. You're well known for managing Infratil. So tell us about the group.
We started purely as the manager of Infratil, and for the longest time, all Morrison was the manager of Infratil. So Infratil's unusual in the New Zealand market, probably unusual in most markets, in that it doesn't have its own management team. What it has is an independent board, and then Morrison managing it under a contract. And so that was set up way back in 1994. And then as Infratil has succeeded and grown, Morrison's always tried to invest in building our team and capability ahead of Infratil's needs, so that you're trying to find what's the next great idea. How are we structured? We're basically 220 people around the world. A small set of people who've got very dedicated roles to specific funds, like Infratil. So Jason is the Infratil CEO with an Infratil finance function underneath him. And then a bunch of people who are out there just trying to find the best investment ideas in the world. So those are people sitting in offices in New York, London, Singapore, etc., combing the world for good investment ideas. You've got people who are just kind of deep research thinkers who are saying, asking that question, what will the world need more of? So they're doing quite top-down research. And then you've got people who are real kind of grease under the fingernail operators. So typically whenever we've invested in a business and you've found a great CEO or a great chief development officer or someone with really special skills, if you've sold that business, we've tried to hold on to that person. So you end up with a team that's this unusual mix of some quite deal-oriented financial people, some people who are these very kind of esoteric big picture thinkers, and then some very practical operators. And where the magic happens, and it's quite hard to make the mix work culturally, but where the magic happens is when you get those people looking at the same problem from different angles and really debating and trying to find the truth. And so we spend a lot of time trying to make sure that people are smart, hit all those criteria, but actually are people who like a debate, like challenge, can deal with people who are different, because it's always a lot easier to just work with people who are like you. But when you make that all happen, that works really beautifully.
And so how do you go about making investment decisions?
With a lot of angst and thoughtfulness. I'll talk you through an example of an investment process, because I think it is quite weird and unusual the way we've ended up doing this, but it's evolved and we've kind of learnt what's worked over 30 odd years. So how did we end up buying Canberra Data Centers? Way back in, it's probably about 2012, some of that research team was charged with this question of, we can see booming demand for data storage and transmission, but we want to have investments that are really downside protected. And we know that if you look at a lot of sectors that are exposed to data, they're still very high risk, or they don't manage to maintain their margins. So that team did a lot of research on what's going to drive the growth of data. Then they looked at what are all of the physical assets that you need to support that, and then said which have got the biggest barriers to entry, strongest market positions. And conclusion from that work was they really liked data centers, the fibre that connects up data centers, and telecommunications towers that mobile operators use. And then within data centers, we said, some of this feels too much like kind of a property play where, you've got a contract, but at some point your tenants could move out. Some of it feels a little bit too much like venture, like too much risk exposure. And so we wanted to find the lowest risk way to invest in that, because often what we're looking for is, very long-term contracts or very strong market position and a stable market structure. And that's not always what you find with tech companies. And so the team found this business called Canberra Data Centers, which back then was 2 locations in Canberra. And when you looked through the government tenders, because government publishes all of their tenders publicly, you found this company won about 90% of all government tenders. And you're like, okay, how is it when the government's running an arm's length competitive process, one company's winning so much? And what you found was they had done some really smart positioning about how they set up their business. They had the most secure operations, the most secure backup power. they had got some very security conscious government agents as early customers, and so other government agencies could see that that was a safe place to be. And then they got this ecosystem benefit of, once one government agency's in there, others want to share data with them, and so they want to be in the same location. Like, wow, that's fascinating. At that point, the original backers of that business were looking to exit. We tried to buy it and we failed. They sold to someone else and we were very disappointed. And the team kept talking to the founder of that business, Greg Borer, who's this amazing entrepreneur, for 3 years, and talking to the private equity firm who had invested in it. And finally we got to a point where they said, okay, we're thinking about an exit, tell us your price. And they gave us a period of exclusivity. So after by then we'd probably been working on that deal for 5 years, and then you had this really intense 6 weeks of trying to get the deal done. So not everything is quite as circuitous route as that, but that's generally the principle. Find a problem the world's got to solve, try and find the business that's best positioned to solve that problem, be willing to pay an absolutely fair price, and then keep investing to grow it. So that business originally, we put 800 million Aussie dollars into it to buy it, and we've continued to invest capital and grow it from Canberra into Sydney, into Melbourne, into New Zealand, and today it's worth over 13 billion.
And it sounds like you played a bit of the long game with it too. Does Horizon play into those decisions? Yeah,
everything for us is a long game. Starting with the fact that the money we invest is very long term. So if you think about the Morrison business overall, you've got Infratil, and then most of our other clients are either sovereign wealth funds or pension funds, and so they typically have 20, 30-year horizons. So that's great because it drives a culture for us of always thinking about the long term. So it's never like, what's a business that I could just buy, pull some cost out, fix up and sell. It's what's a business that I'd want to own for decades, which then means you do that really long-term thinking about finding the right business, and then you're willing to spend 2 or 3 years trying to own the best business rather than just responding to what gets brought to you by investment banks.
Did geography play a part in that, with it being in Australia?
Yeah, definitely. Infrastructure is a kind of business where you need to be local because you're owning assets that are kind of critical to their communities. So for the longest time, everything Morrison did was New Zealand, through the 80s, early 90s. Then when Australia started doing its first infrastructure privatisations, Morrison kind of jumped the ditch and set up here in the 90s and was successful in those. And so we'd become, I think, enough of part of the furniture in Australia that when an asset like that came up, we felt like we were natural owners. And clearly the Australian government really cares who owns that data centre, given that their own government agencies are in it and they've got very secure data loads. And so the fact in that we were local, Australia, New Zealand local, Infratil is Australia, New Zealand, and the investment partner that we brought for Infratil to that was Commonwealth Super, so that's the pension scheme for government and military employees. So it's kind of a perfect match with the end customers of that business. So today, obviously, our footprint's global, so we look at those same ideas in a lot of different locations, but back in 2013, when we started looking at that, we wouldn't have looked at it if it wasn't in Australia and New Zealand.
How does it differ between the private companies and the public companies, knowing that you've got a mix of both?
We like investing in private companies, unlisted companies, and the reason for that is, it's going to sound nasty, we like control. But what I really mean by that, we want to invest in things where you can fundamentally make the business better and drive the direction of the business, which means you want to be able to determine strategy, you want to be able to determine who's in the management team, having great people there, and work in partnership with them. So that works really well in private markets where you can have a long-term perspective. Infratil is this quite amazing beast, right? Because Infratil is a daily liquid stock that you can buy for a minimum unit of whatever it is today, $11.50, but gives you access to unlisted private market assets with this long duration. And that's really rare. In fact, one of the big trends in our industry of infrastructure funds and management at the moment, all the US firms are trying to create these what they call semi-liquid vehicles that will attract retail and high net wealth money into them and they're doing all this really arcane structuring to create something which looks like what Infratil was in 1994, but not quite as liquid. Now that's partly to do with US regulation. That means you couldn't create an Infratil there, but it means Infratil is this really cool thing that you can sit there in Australia and New Zealand as a retail investor and get access to something that otherwise only the biggest institutional investors in the world can do.
You're also credited with integrating sustainable investment in a broader sense. Can you tell us about Morrison's philosophy in that?
Yeah, it starts from Lloyd Morrison and that idea of we will only do well when we're investing in things that the world needs more of. And if you're investing in things the world needs less of, you should anticipate that sooner or later that catches up with you. Regulators toughen rules on you. Whereas if investing in something the world needs more of, you can buy an initial business, but then keep putting more and more capital into it, normally at higher average returns because you really know what you're doing as you grow that business. So that leads you to, what are the big problems the world needs to solve? Decarbonisation is an obvious one. And having got our start in New Zealand, like you've got this weird superpower, right, which New Zealand's got a lot of rain and wind and not so much coal. So New Zealand's already 90% renewables, and we could start investing in renewables in 1994. And then as the rest of the world has caught up with that, we said, well, here's a problem the world's got to solve that we've got an advantage in. So that's the starting point. Is actually, it's not a sustainability idea, it's actually just an investment idea. I think where a lot of our industry's got itself into trouble in recent years has been where it's tried to tick the box on ESG and market ESG without actually thinking, does this make my investment better? So for us, we've always just tried to stay strictly on what will deliver the best returns and what are we good at.
So while we're pulling the thread of, big ideas or what's going on in the broader environment, we are seeing a lot of political volatility.
Yep.
Is there anything, what worries you the most about that or excites you the most about that?
I'll try and be an optimist.
Yeah.
The optimistic point of view is wherever there's dislocation, there's opportunities, and wherever people are taking simplistic top-down views, if you're right in the detail, you'll find opportunity. So, for example, right now, the last thing most investors want to hear about is a US renewable energy idea, because they're like, doesn't Trump hate renewable energy? But if you can actually work through the detail of what things will do well and what won't, and exactly how will tax credits work and what energy demand from US data centers means, can they actually, I'll tell you an interesting fact, there's all this talk about we're going to not do renewables, we'll do gas generation. If you wanted to buy a gas turbine for a power plant right now, the earliest delivery you'd get would be 2029 or 2030. So one way or another, if you need energy to fuel a data center, you're going to be using some combination of solar, wind, batteries, unless you happen to live near a nuclear plant that has got excess capacity. So you kind of work through all of that, and you see there's actually these really interesting micro opportunities that seem quite counterintuitive. So that's the optimist in me. Like, great opportunity when everyone else is kind of running one way to work out where the opportunity is underneath. The deep worry I have is there's a risk that some things which have underpinned the whole global capital system get strained. And ultimately, people always talk about US exceptionalism. Like, what does US exceptionalism really mean? Apart from being a wonderful, dynamic economy, which it definitely is, it means because you've got the reserve currency, every year you get to buy all the world's stuff, run whatever it is, about a 7% budget deficit, and then hand them bits of paper saying, I'll give you money later in 10 or 20 years, and you keep low interest rates because you're the world's kind of reserve currency. I think that if the combination of lack of trust in US institutions along with lack of fiscal discipline means that you have a blowout in the US's ability to borrow long term, I just think that will uncover all kinds of problems in the financial system that we haven't contemplated because no one thought that US 10-year rates would go above a certain number. So that's probably the biggest worry. And everything we do basically prices off US 10-year bond rates. You're then kind of adding your risk adjusters on top of that. What happens if that's no longer considered the risk-free rate in the world?
How do you think about that, or how do you think through that?
There's no simple answer other than we're being really cautious. I don't think there's any really clear kind of economic winners in the long run from that. Like, you'd love it if you go, oh, well, the US might lose and Germany might win, but I think everyone has problems if you end up in that situation. So you just have to be cautious. So it means you want to keep borrowing levels low in your businesses. You want to understand any refinancing opportunities that are coming. You want to be really kind of greedy and selfish about where you invest. So where last year you might have accepted a return of X, now it might be X plus 200 or 300 basis points. But yeah, it probably does create a really great environment for investing if you're doing it carefully. But definitely risk to the downside.
Infrastructure is having a moment. What do you think is behind the global surge of interest from investors?
Yeah.
I mean, you've always been in infrastructure.
Yeah, so. That's the weird thing, right? Like one of our favourite clients here in Australia said to me a few years ago about Morrison, it's like, he's like me, a child of the 90s. He said, it's like when there's that band you love, all of a sudden everyone heard about, and you're like, they used to be my thing. Like, that's how you feel a bit about infrastructure. Like, it used to be this weird, obscure asset class that people didn't even know was an asset class, and now everyone's
so underground. Talking about
it. Yeah. So I think there's a couple of things going on. One is everyone is realising there's this massive investment required. So if the world's going to decarbonise, if the world's going to get much more efficient in terms of its kind of core physical infrastructure like roads and rail, etc., a lot of capital has to go in. Also, the asset class is now expanding to cover things like data centres that hadn't been thought of before. So it feels like an enormous amount of capital to be invested, therefore a good investment opportunity. The other thing that's going on, I think, is Australia has been a world leader. So the average Australian superannuation fund probably has 15 to 18% of its portfolio invested in infrastructure. That's not the case around the world. So US pension funds might be at 2%. Australia was just really early at privatising airports and things. And because the US has been much slower in those things, the asset class hasn't really developed. And so as it started to emerge, a lot of the big global asset managers have said, wow, if this thing that's currently 2% could grow to 15% of growing capital pools, and there's demand for where that money's going to go, we ought to get into it. So you're seeing a lot of investors want to go there, but also the kind of fund managers want to build businesses there, so they're hyping it up, which is ultimately probably a good thing for us, more competition, but more attention in the space.
You've got a real strength in digital and connectivity assets. How do you balance the environmental footprint on those that the data centres have? Yeah,
that's a really big question. So energy consumption of data centres is high and is growing rapidly with AI. And water use can be very high for cooling that equipment. Again, some of these things are better to be lucky than good, like we happen to come from New Zealand, which was good for renewables. In data centres, our first data centre coming from Australia, Greg Borer, the entrepreneur there, actually was the first person to build water-cooled data centres that use a closed loop. So you're not chucking water out every day, you're kind of rotating it around the loop. That turns out to be perfect for AI and excellent for the environment. So we feel like in that one, actually the focus on that area could be a benefit. With renewable energy, or with the risk of a lot of carbon footprint from your data centres, actually your customers are your best friends. So the hyperscalers, the Microsofts, the Amazons, etc., generally all have their own net zero commitments. And so they are wanting you to show that you can source renewable energy for your data centres. So you've still got the challenges of can the grid just keep up with demand? But I think we will actually be a driver of greenification of the grids through our data centres. But yeah, it's the kind of thing where you can quickly lose your social licence. So You saw in the past Ireland and Singapore put in bans on new data centres for a period because there just wasn't enough energy to go around, and when that's putting people's home power bills up, it's quite an easy thing to turn off. So means we also need to be part of the solution with our renewable energy business.
How are you thinking about the developments in AI and infrastructure?
So there's a few different ways. The first and most direct way we're experiencing it is through the data centre business, and that is just insane. If you look at this rate of advances and therefore the rate of growth of demand for computational power, I think we're kind of only just at the very start of what that's all going to mean. There's still a bunch of uncertainties, right? Like when DeepSeek came out, it showed that you could do a lot of stuff more efficiently, and I expect that efficient frontier will keep moving. So it's kind of a battle between exponentially growing demand and exponentially improving efficiency. But ultimately in that, I think the demand's just going to rise, because as things can get efficient and cheaper, we'll use more of them. So AI will be massive for the data centre business. We're starting to see it roll through now through some of our other digital infrastructure businesses, like booming demand for fibre networks that connect end users to data centres, for example. And then we're seeing it in our renewable energy business. Like our biggest customers for our renewable energy business in the US are the same as our biggest customers for our data centre business in Australia. It's the hyperscalers. So that's all hitting us kind of first. There's then the question of how do you use AI within the businesses? I talked about those kind of creative, strategic research thinkers. You can imagine they're some of our best experimenters, and they're doing things like whenever anyone in our team globally comes across an interesting research report on anything relevant, it all comes into a central place, gets ingested, so that you can then start asking creative prompts about what we're experiencing anywhere in the world. So it feels like we're right at the beginning of something that will be transformational for our portfolio, but also for our own business.
Feels like the transformation is coming, but we're not quite, like we've got on the one hand people, using it to, create Barbie doll versions of themselves, or like, what Barbie would I be? Or, and then on the other hand, these incredible business efficiencies. And I think we're only coming to know the ways that it will transform our world.
Exactly. And one of the things that was really eye-opening in the last little while, right, when we all first experienced ChatGPT and then Microsoft pulled off that amazing deal with OpenAI, I think we'd started to think this is a kind of like winner-takes-all space, and there's going to be one winning LLM and one winning hyperscaler out of it. And these days you see there's probably 6 LLMs that every few months someone releases an update and they become the best in the world at some different area. So really dynamic, which probably means it's not winner-takes-all for the LLMs. Probably the efficiency benefits all flow out to companies using these products, right? So I think that's really good for the economy, probably drives productivity. Hopefully it's something countering those higher interest rates that you might otherwise get through all the other fiscal issues in the world.
Are there any other interesting areas that you're investing in that we haven't touched on?
Yeah, we're doing really interesting stuff in healthcare related infrastructure. So that's one of those spaces where really clear problem to solve. As populations age, there's more and more healthcare requirement, and the government's budget to pay for it is limited. And that was what led us first to diagnostic imaging. So radiologists, think about for anything from your simple X-ray to PET scans. That's an area where early detection and early intervention can really reduce the system-wide costs of disease. And so then we went about saying, like, how do you find really nice defensive businesses with good market positions to do that? And that's got a real global growth story, because radiology has moved from being something where you go to your local clinic and they take an X-ray and the radiologist in the next room reads your scan, to being something where that scan can be read by a appropriately qualified for your jurisdiction doctor anywhere in the world. And so, for example, if you've got Australian, New Zealand qualified radiologists sitting in London, they can be working on the scans that are urgent overnight that otherwise you pay 2 or 3 times the amount for. And then if you've got these qualified people in New Zealand and you bring a few people from London, you can actually serve the UK market. So I think that's one of those ideas that's globally scalable from a base at the bottom of the world. In fact, being at the bottom of the world's a bit of an advantage for the time zones.
You've got to let stuff go too. How do you feel about letting stuff go?
So because we're such long-term investors and you do everything with a perspective of owning it for 20 or 30 years, I think one of our failings is we don't always think about exit as actively as others. Like, think about normal private equity managers who buy something, fix it up, flick it on in 3 or 5 years and collect their carry. They're always thinking about the sale. That's just not the way we're built. So it does mean we need to be really disciplined. So, we now do for every asset, no matter how wonderful it is, we do an annual buy, sell, hold review. And sometimes the question can be, actually, this is a great business, therefore you should sell it. So if you think about Tilt Renewables, that was close to my heart. Like, literally, we worked with that management team to create it, to pull it out of Trustpower and make this thing. We built it up, got it to a point where you thought it was the best renewable energy business in Australia and New Zealand. So then to be willing, when people started making offers for it, to entertain them was a bit of an emotional stretch. But then when they started coming in, you're like, actually, I think this is worth more to them than it is to the Infratil shareholders. We can always go again.
Yeah.
And so being willing to do that and redeploy that capital. I think one of the good things about the trust that the market has built over the years and the Infratil board and the Morrison team is they do believe that we can reinvest well. So it's not like you sell things and they immediately say, give us all that capital back. I think they're starting to believe over the last few years, actually, if we leave that capital with you and are patient like you are, you'll probably find something really good to do with it.
So let's look to the future. What excites you the most and what keeps you in your job?
The thing that excites me the most is actually this idea of building our own intergenerational business. So just like the things we invest in go for multiple decades, having a Morrison that goes kind of in perpetuity. And when you look around the world, because we're the longest standing specialist infrastructure manager in the world, we've actually been, I'm the third CEO. We've been through multiple market cycles. You've seen kind of generational change. That's really rare. Like, most of our peers are 10 to 20 years old. The original founders probably still own most of the business and they're looking for a way to sell it and retire. So their horizon starts to shrink. Whereas for us, we've got this wonderful structure where almost all of our team are shareholders. And when we retire, we sell the shares back to the next generation. And along the way, we keep kind of increasing the ownership of the next generation. And then we've got the foundation that Lloyd set up before he died as a cornerstone shareholder there in perpetuity. It means you really can think on the same horizon that our clients think about. So that's actually what excites me when you look around and go, there's all these people in this business who are way smarter than I am, way more equipped than I was at their age to think about investing. And one day they're going to be running this business and it's going to be way bigger, way better than it is today.
What's one thing you'd like your shareholders to know?
I reckon the thing that would surprise people most who kind of look at Infratil and Morrison from the outside, like, I think people expect us to be this group of really kind of financially driven, almost like investment bankers. And I think they'd be really surprised if they walked into the office and there's this very kind of curious, inquiring, collaborative group of people trying to problem solve, and always kind of thinking about the long term, and then trusting that the financial outcomes kind of fall out the bottom of that, rather than being the thing you're targeting. I think, like, certainly that was the thing that surprised me most when I turned up, and I think there were only 17 other people when I turned up at Morrison, that it was this kind of quirky, esoteric, kind of truth-seeking, curious bunch of people. So that's probably the thing I'd most like if people understood, because I think it's the coolest thing about working here.
Do you have a favourite quote or piece of advice that you like?
I'll tell you the thing that Lloyd Morrison said to me that always stuck with me. Lloyd had a lot of good Lloydisms, but when I was talking about moving to Australia and that we should set up a business here, and back in, I guess, 2008, 2009, this market was dominated by people like Babcock and Brown, who had got themselves into trouble, kind of being too short term and not thinking about their clients. And I kind of said, I can see an opportunity there, but I can see all the reasons why this would be really hard. And Lloyd said to me, the day you decide to run a marathon, you can't run a marathon. What matters is that you decide to do it, and through deciding to do it, you commit, and then you do all the things that make it possible. So don't be put off by the fact that you're not capable of doing something now. Just make the decision, and then you'll do it. So yeah, that was the thing I always remembered. The day you decide to run a marathon, you can't run a marathon, but you'll never run a marathon until you decide to do it.
Well, I love that. I'm going to write that one down. And I think now that we've had the chat, I can definitely think philosophy and economics need a rebrand, because I think there is definitely more in common with those ideas than we think, isn't there?
Definitely.
They are way more connected than I think where we started at the start of it.
Exactly. I actually think like all philosophy really is the study of things we don't yet have a proper methodology for. So you end up with these really esoteric grey things, which is kind of what we do when we're investing. Like once you've got a formula for it, it stopped being the source of alpha. So yeah, we're kind of just doing philosophy every day. Yeah.
Hey, well, thanks heaps. I've really enjoyed the chat, and I'm sure everyone else will too. Appreciate your time.
Thank you very much. It's been fun.